Hey guys, in this video, we're going to show you how to master Fibonacci trading. Many traders use Fibonacci tools, but most actually use them incorrectly, which results in losing trades. As always, if you want more videos more often, please hit the like button, as it allows for our team to keep producing videos on YouTube. Now, a very important point first. Fibonacci is just like any other trading tool. It is not magic. Don't use Fibonacci on its own. Always combine the usage of Fibonacci with other price action concepts to increase the quality of trade entries and exits you have already identified. So let's dive right into it. Starting with Fibonacci retracement. So in an uptrend, these are the Fibonacci levels we look for. First, the 50% Fibonacci level, which is what we call good because it represents a deep pullback within a moving trend. Next is the zone and area between 50% Fib and 61.8% Fib, which is what we call great because it represents a deep pullback within a moving trend. Then we have the 61.8% Fibonacci level, which is what we call best because it represents a very deep pullback within a moving trend. In the opposite direction, in a downtrend, the same thing. 50% Fibonacci is good. The zone and area between 50% Fib and 61.8% Fib is great. And 61.8% Fibonacci is best. Now there's also the 38.2% Fibonacci level, which is very effective to use in a very specific use case, which we'll discuss later in this video. So two very key points. 1. Fibonacci retracement levels act as a form of support and resistance, as they represent areas of value within a moving trend. This means trade opportunities present themselves at these Fibonacci levels because the big boys look to add to their winning positions at these areas of value, which creates momentum for your trade. And 2. Treat Fibonacci levels as areas and not as a solid line or solid number because you use Fibonacci levels in combination with price action and not on their own, so it doesn't have to be a picture-perfect setup. Let's now show this right on the charts. You have your moving uptrend through the higher highs and higher lows. These runs are known as your impulse moves. These pullbacks are known as your corrective moves. Price starts pulling back right here, and you decide you want to look for a possible pullback long entry to trade with the uptrend. But you're not just going to jump in blindly at any random spot. You want to enter a trade setup at an area of value within the moving uptrend. So you take your Fibonacci tool. Click at the recent swing low here, drag it up to the recent swing high, and then move it a bit to the right so that it stretches out, and then click again to lock it in. Your Fibonacci levels are here to the right. So once price reaches any of these Fibonacci levels, you would look for candlestick price action followed by a trend change confirmation before taking a long entry. If you want to use the same Fibonacci tool and platform we use, go to tools.wisetrade.com. Now going in the opposite direction in a downtrend, you have lower highs and lower lows. These runs are known as your impulse moves. These pullbacks are known as your corrective moves. Price starts pulling back right here, and you decide you want to look for a possible pullback short entry to trade with the downtrend. But you're not just going to jump in blindly at any random spot. You want to enter a trade setup at an area of value within the moving downtrend. So you take your Fibonacci tool, click at the recent swing high here, drag it down to the recent swing low, and then move it a bit to the right so that it stretches out, and then click again to lock it in. Your Fibonacci levels are here to the right. So once price reaches any of these Fibonacci levels, you would look for candlestick price action followed by a trend change confirmation before taking a short entry. Let's now show this combined with price action. You have your uptrend through the higher highs and higher lows. Price pulls back to the 61.8% Fibonacci level, which represents a very deep pullback in an area of value within a moving uptrend. You had long wick candles form right at the Fib level, showing that price is indeed reacting to the Fib level. You then wait for a trend change confirmation before taking long trades, which you had through the bullish momentum candle. That is also a candle color change. Now in the opposite direction, you have a downtrend through the lower highs and lower lows. Price pulls back to the 50% Fibonacci area, which represents a deep pullback in an area of value within a moving downtrend. You had multiple candles with the wicks sticking out that formed right at the Fib level, showing that price is indeed reacting to the Fib level. You then wait for a trend change confirmation before taking short trades, which you had through either the bearish momentum candle or after the double top pattern formed. So this was using Fibonacci levels in the simplest form. Let's now take it up a notch and combine Fibonacci levels with support and resistance and areas of confluence. Combining Fib levels with support and resistance in areas of confluence gives you higher quality trade setups, meaning a higher percentage chance of success and of the trade going a greater distance for higher profits. So this reversal point here gives you a key level. This here is your area of confluence, where the support level, moving average, and Fibonacci all lined up perfectly. Once price pulled back to the area, you had a long wick candle form right at the area of confluence, and with the wick touching the 50% Fib level. You also had a candle color change and inside bar, which shows momentum loss. Once you had an intraday trend change confirmation, you would look for long entry points. Let's show this again. You have a moving downtrend, followed by consolidation, then a break above and higher high, which shows the start of a fresh trend change and upwards momentum. These two reversal points here give you your key level. This here is where the support level and 50% Fib level both lined up. Once price pulled back to the area, you had multiple candles with the wicks sticking out, showing a reaction to the area. Once you had an intraday trend change confirmation, you would look for long entry points. So again, these reversal points give you a key level. Price breaks through the very key level, showing how strong the uptrend is. Now, you don't know if this is a false breakout or not, so one way to get around this problem is to look for a pullback entry, which you had right here, where the support level, moving average, trend line, and 50% Fibonacci all lined up perfectly, making it an area of confluence. You had multiple candles with the wicks sticking out and a double bottom pattern form, all which shows a reaction to the area. You can take a long entry after the bullish momentum candle and higher high, or for an earlier entry point, look for the intraday trend change confirmation. Now, going in the opposite direction in a downtrend. You had a short trade setup here where the moving average and key level both crossed. This is also where the 50% Fib level lined up. You had a candle color change and wicks sticking out and created a successful short trade. Another short trade setup here where the moving average and key level both crossed. This is also where the 50% to 61.8% Fib zone lined up. You had multiple long wick candles form, showing a reaction and another successful short trade. Another short trade setup here. This is also where the 50% Fib level lined up. You had multiple candles with the wicks sticking out and a double top pattern, all which shows a reaction and created another successful short trade. Let's show this again. This is the Tesla stock. You had a moving downtrend through the lower highs and lower lows, so you want to trade with the trend. This here is your key zone because of these reversal points. The 50% Fib level also lined up perfectly. This presented two quick lower time frame short trades, in and out for a quick profit. Now let's go through a multi-time frame trade we took. You had your double bottom and break of trend line and higher high, showing a new uptrend and bullish momentum, so you want to trade with this upwards momentum. Price then pulls back to this support zone that was created from these two reversal points. And this is also where the 61.8% Fib level lined up, which is a high quality Fib level. This is also the start of an inverse head and shoulders pattern, which is a reversal pattern. And this would be an aggressive right shoulder early entry. Once price reached the area, you had multiple very long wick candles reacting to the Fib level and support level, which presented a long trade opportunity. Now, a reaction does not equal a trade, as price can stall at the area and still continue downwards. Because don't forget that this is still a current moving downtrend. So what you do is, you need to look inside of these long wick candles, but on a lower time frame for any form of price action that signals a trend change from a downtrend to an uptrend. Let's then pull up the intraday time frame and put it beside this one. So on the left is the main time frame we just looked at and where you found your trade setup. And on the right is the same asset, but using a lower intraday time frame. This area here, where you identified the long trade setup, is this same area here on the lower time frame. What you had was a rising wedge pattern. And once the pattern broke above with a higher high, this confirms the trend change from a downtrend to an uptrend, and is when you would start looking for a long entry point using our entry and exit strategy. Let's now get into how to use the 38.2% Fibonacci level. When an asset is trending heavily, it won't always pull back to the 50% to 61.8% Fibonacci area. Often, you'll only get shallow pullbacks and not deep pullbacks. Now, you don't want to miss out on trading with a heavily trending asset because that's where the big money is made. This is where the 38.2% Fibonacci level comes into play. You use it in two very specific scenarios. Scenario number 1, when the 38.2% Fibonacci level lines up with an area of confluence. So you have a clear moving uptrend through the higher highs and higher lows, and you want to trade with the trend. This here is your very high quality area of confluence because you have a key support level, trend line, and moving average that all crossed. This is also where the 38.2% Fibonacci level lines up perfectly, making this an even better area of confluence, as you are at an area where continuation traders are looking to add to their winning long positions. Remember that the 38.2% Fibonacci level is still a good pullback area, as it represents roughly a third of the way of your previous impulse move. This is very key. So you had candles with the wicks sticking out right at the high quality area of confluence, which shows a reaction. And once you had an intraday trend change confirmation, you would take a long entry. Let's show this again. You have a clear moving uptrend with heavy momentum as it breaks clearly through the key level. As price pulls back, you had an area of confluence here where the moving average, very high quality support level with multiple reversal points, and 38.2% Fibonacci level all crossed. Once price reaches the area, you had multiple candles with the wicks sticking out, showing a reaction. So you would either take a long trade after price broke above the falling wedge pattern, or for an earlier entry point, look for an intraday trend change inside of here. Let's show one more. You have a moving downtrend through the lower highs. Price then breaks below the key support level and below the descending triangle pattern, showing the bearish momentum, so you want to trade with it. Price then pulls back to your area of confluence, where the resistance level, moving average, and 38.2% fib area lined up, which presented a short trade opportunity. Now, you then also had a second continuation entry down here, as you had a support turn to new resistance level, moving average that crossed, followed by the 50% fib level lining up perfectly, which presented another short trade setup. Let's now go through a multi-time frame trade setup. Now, there were two trade setups we took on this asset. This here was the first trade setup, where the support level, backside of the trend line, right shoulder of the inverse head and shoulders pattern, and 38.2% fib level all crossed. Now, our second trade entry took place right here, but on the lower intraday time frame, using the confirmed bullish and upwards directional bias from the first trade setup here. So let's pull up the lower intraday time frame and put it beside this one. On the left is the 30-minute time frame we just looked at, and on the right is the 5-minute time frame. This here, where the trade setup we just identified is this same area here on the lower 5-minute time frame. Now, your second entry point was right here, where the support level, trend line, and 50% fib level all crossed, which presented another long trade setup. Let's now move on to the second scenario for when you would use the 38.2% fib level. When you have a trigger event that occurs before a 38.2% Fibonacci retracement setup. So when you have a recent trigger event and trade setup close by to the left, this gives the asset you are trading a clear directional bias with heavy momentum and speed. This means that you often won't get a deep pullback to the 50% to 61.8% fib area in these scenarios due to the heavy ongoing momentum. Now, you don't want to miss riding the wave of this heavily trending asset just because you aren't at a deep pullback area, as these heavily trending scenarios after a trigger event is where the big money is made. So what you do is you look for a continuation trade at the 38.2% Fibonacci shallow retracement level after you had the trigger event close by to the left. Let's show this on the charts. This double bottom trade setup here is your trigger event. Price then breaking through the trend line, breaking through resistance, breaking above the moving average, and making a higher high further shows how strong this fresh moving uptrend is. So in cases like this, where you have so much upwards momentum, you often won't get a deep pullback to the 50% to 61.8% fib area. This here is where your area of confluence trade setup resides, because the key support level, moving average, and 38.2% Fibonacci level all lined up perfectly. As price reached the area, you had multiple candles with the wicks sticking out, showing a reaction. And once you had an intraday trend change confirmation, you would look for long entry points. Let's show this again. This double bottom trade setup here is your trigger event. Price then breaks above the descending triangle pattern and trend line, breaks through the key resistance level, and makes a higher high, which shows how strong this fresh moving uptrend is. This here is then where your area of confluence trade setup resides, because the very key support level with multiple reversal points, moving average, and 38.2% Fibonacci level all lined up perfectly. As price reached the area, you had multiple candles with the wicks sticking out, showing a reaction. And once you had an intraday trend change confirmation, you would look for long entry points. So one more. So price breaks through the key level, breaks through the trend line, and makes a higher high, which shows how strong the upwards momentum is. So you want to trade with it. This here is your area of confluence trade setup, where you had multiple very long wick candles reacting to where the moving average, support level, backside of the trend line, and 38.2% fib level all crossed. Now this trade setup here then acts as your trigger event for your second trade setup here, where the new support level, trend line, and 38.2% fib level all crossed. You had a long wick candle and candle color change right at the area of confluence and presented a long continuation trade. Now, moving on to the next topic. Fibonacci extension for trade exits. So before we continue, we want to hear from you. Tell us in the comments below right now what topics we should cover next, as we always look at the comments to decide on next video topics. Also, please hit the like button, as it allows for our team to continue to produce free YouTube videos. So, Fibonacci extension levels can be used to identify trade exit points due to trend exhaustion and the big guys taking profit. In an uptrend, you have your impulse moves here and your corrective moves here. Grab your Fibonacci extension tool, click at the start of the previous impulse move here, drag it up and click again at the start of the corrective move, and then drag it down to the starting point of your current impulse move. Then drag it slightly to the right and click again. These are the Fibonacci extension levels we use. Now, a very important point. Different traders will choose to use different Fibonacci extension levels, which is perfectly fine. The ones we use work best as part of our overall strategy, but you should use whichever Fibonacci extension levels you find work best as part of your overall strategy. Fibonacci levels aren't an exact science, so you must use them in combination with price action to increase the quality of an already good trade entry or trade exit, and not on their own. So in the opposite direction, in a downtrend, you have your impulse moves here, and your corrective moves here. Grab your Fibonacci extension tool, click at the start of the previous impulse move here, drag it down and click again at the start of the corrective move, and then drag it up to the starting point of your current impulse move, then drag it slightly to the right and click again. And these are your Fib extension levels. So, starting with the 50% to 61.8% Fibonacci extension zone for trade exits. So, you went long at this key support level here, or through the breakout here. Price then starts to trend heavily upwards in your favor, and you start looking for possible exit points. But there is no resistance level in sight to target for an exit. So what you do is, you take your Fibonacci extension tool, click at the start of the previous impulse move here, drag it up, and then drag it down to the starting point of your current impulse move. You would then be watching the 50% to 61.8% Fibonacci extension area for price action to signal a possible trend change, which you got through the sideways chop, descending triangle pattern, followed by the break below the pattern. It's at this point when you would further trade manage or exit manage your position, which we cover in depth on our site. Now, what is the psychology behind why the 50% to 61.8% Fibonacci extension area is important? This fib zone represents a travel distance of roughly 50% or halfway of the previous impulse move, which is usually the first area where the big boys will look to take some profit, which can trigger a pullback or a reversal. So going in the opposite direction. You went short here at this long wick candle at key resistance. Price then starts to trend heavily downwards in your favor. Your target 1 could have been this support level here. But now, once price breaks through and continues on, where could your second exit target be? So what you do is, you take your Fibonacci extension tool, click at the start of the previous impulse move here, drag it down and click again at the start of the corrective move, and then drag it up to the starting point of your current impulse move, then drag it slightly to the right and click again. You would then be watching the 50% to 61.8% Fibonacci extension area for price action that signals a possible trend change, which you got through the shrinking candles, multiple candles with the wicks sticking out, and a very long wick candle that is also a candle color change. It's at this point when you would further trade manage or exit manage your position. So let's take this up a notch. When the 50% to 61.8% Fibonacci extension zone lines up with a recent swing high. So you went long at this key support level here, or through the breakout here, or through the continuation entry here, and you start to look for exit points. You eye this key resistance level here for an exit point, as it is a swing high. When you apply your Fib extension tool, the 61.8% Fib extension level also lines up perfectly. Once price reaches the area, either look for an intraday trend change for an exit, or wait for a break of the trend line here. So what is the psychology behind why these are great exit points? When a Fibonacci extension of 50% to 61.8% lines up with a recent swing high, price is at a premium due to it being at the highest price point in recent time. Also, the 50% to 61.8% represents a travel distance of halfway or more of the previous impulse move, which is when the big boys often look to take some profit. This double factor can trigger a possible reversal at these areas, making it a great exit target. So let's show this again. So you went long at this inverse head and shoulders pattern and break here, or through the continuation entry here at the right shoulder of another inverse head and shoulders pattern. You are then eyeing this key resistance level here for an exit point, as it is a swing high and highest price point in recent time. When you apply your Fibonacci extension tool, the 50% Fib extension level also lines up perfectly. Once price reaches the area, you had multiple long wick candles reacting to it. You either look for an intraday trend change for an exit, or wait for a break of the trend line here. Now in a downtrend, this concept would work the same, except you would have the 50% to 61.8% Fib level lining up with your recent swing low support level. Let's now move on to the 100% Fibonacci extension level. So you went long here at the key support level, or through the continuation entry here. Price trends heavily upwards in your favor, and you start looking for possible exit points, but there is no resistance level in sight to target for an exit as you're entering uncharted territory. You apply your Fib extension tool. The first area you were looking at for an exit was the 50% to 61.8% Fib extension area, but there was no trend change price action and price continued on. Then the next level you would be eyeing for a possible exit is the 100% Fibonacci extension level here. Again, you need trend change price action once price reaches the 100% Fib level, which you had through two possible exit points. Short-term trend line here, and once you had the break, look to exit manage your position. Or long-term trend line here, and once you had the break, look to exit manage your position. Now, what is the psychology behind why the 100% Fibonacci extension area is important? The 100% Fibonacci extension level means that your current impulse move has traveled the same distance as your previous impulse move. This means that price is now at an extreme premium and might suffer from trend exhaustion. The 100% Fibonacci extension level is often where the big boys look to close out large portions of their positions to mitigate risk, which can trigger a large reversal or a very deep pullback. So let's show this again. You went long at this long wick candle at support. You were then eyeing this key resistance level here for an exit point. Now applying the Fib extension tool. Notice how the 50% to 61.8% Fib extension lines up perfectly with the resistance level. When price got to the level, you had a candlestick reaction, but no intraday trend change confirmation, and price continued on. Price then reaches the 100% Fibonacci extension area, and the trend change price action came in two parts. 1, the trend line break here, or 2, the trend change pattern through the lower high and lower low. Now here's a bonus technique. You can also apply the Fib extension tool onto the larger uptrend here. Notice how the 100% fib extension level of this larger uptrend also lines up at the same area of the 100% fib extension level of the short-term uptrend, which means both are confluent to each other and makes the area an even higher quality exit point. So moving on to the next topic. Fibonacci expansion for trade exits. In an uptrend, click at the start of the previous impulse move. Drag it up and click again at the start of the corrective move, and then drag it back down to the starting point of your previous impulse move. Then drag it slightly to the right and click again. In a downtrend, click at the start of the previous impulse move. Drag it down and click again at the start of the corrective move, and then drag it back up to the starting point of your previous impulse move. Then drag it slightly to the right and click again. Fibonacci expansion allows you to gauge how far of a percentage your current impulse move is past your previous impulse move to gauge trend exhaustion. So for example, the 138.2% fib level means you're 38.2% past the previous impulse move length. Some traders will again use Fibonacci expansion for exit points. Now, we don't personally use Fibonacci expansion, but the choice is always up to you. If Fibonacci expansion works best as part of your overall strategy, that's perfectly fine. So what we've covered in this video is only scratching the surface. If you want to take your trading to the next level, head on over to our website at wisetrade.com, as we have a ton of content on our site that won't ever be available on YouTube. Don't forget to tell us in the comments below what topics you want us to cover next. Make sure to hit the like button on this video, as it allows for our team to continue to produce more free videos on YouTube. Also, make sure to follow us on our Instagram account at wisetrade. So thanks for watching, and I'll see you in the next episode.